All right. Well, I wanted to follow up with my phase one statistics here. I don't know if I did too much vlogging of the journal that I use, but I basically just came up with this spreadsheet to help me track my trades, and it's good. It's good to see, but it's not something really to follow exactly. Things like the win-loss ratio or wins and losses. It's good to kind of have a pulse of what's going on, but it's not necessarily a true representation of really what's happening because you don't or I don't just set every trade exactly and let it run, whether it's going to fail or not. If I see something that's going to reverse or is not going my way, I will exit early. So there you go. I mean, it may be that instead of, I lose 20 pips, I may only lose 5 pips because I got out early. So these stats are, you just gotta have to take them with a grain of salt, if you will. But anyway, I wanted to just quickly take a look at the kind of what happened. I track pips and then my equity curve. Um, I don't know. It's just something to guide really. But as you can see, I started off pretty good, had some consolidation, thought I was going to break out, and then I had a losing week, if you will, and then then just kind of steadily went up my equity curve. So that was pretty good. But as you can see, the pip totals or the pip count were kind of just steady. There was a pretty dramatic drawdown with pips. I think I kind of corrected and pretty well. I basically just kind of slowed down and stopped with so many trades. Hopefully this time I won't, for phase two, I won't take as many trades. But as you can see, my equity was right at 8%. So that's the passing for phase one. Was the goal was 8%. Um, Other than that, the I added this column DD or drawdown. As you can see, it goes by each trade, and if there's no drawdown, obviously the percentage is zero. But otherwise, it's going to show me, the percent of drawdown that I was in for the overall account, which is good to have, good to see, because when you start getting into 1%, that's when you start saying, okay, we need to back off here and do better. Um, but as you can see, pretty consistently they were at 1%. This one was my worst, I think 1.39. I think what I'll do is I'm going to start charting this column to get a better sense of my drawdown because it's something I need to do better at. And yeah, I mean, like I said, keeping it below 1.5% drawdown is pretty good in my opinion for me and my strategy. But obviously, the lower the better. So I'm going to work on that. What I thought I'd do was show you kind of how I maintain that. So what I do is in my history, I just basically just uh, export it out to HTML. Let's see if I just get all of the history for this. Here, give me 1 second. Okay, and then just do save as report, and it will say save, yes, and it'll save it HTML. Now I'd already done most of my trades, but I'll show you for the last week what I do is all I do is I just copy it out, and then in my spreadsheet, I have some other sheets that allow me to format things, so I'll paste it in here. If there's like cancel, like if I have several of them that have canceled orders, I'd want to remove those so that I just have a nice clean list of trades. And then in here, what I've got is it's kind of like a snapshot of that session. So if that last day, that was Friday, I think, I had one trade, and you can see it'll tally it was 12 pips for $92, and it calculates everything out. And then I just basically just copy that row into the sheet itself. So if I go over to my phase two, actually I put that in the wrong spreadsheet. For phase two, you can see here these were my trades so far. Again, I've got that average win, average loss thing going, but again, it's not accurate because I make discretion as to if I'm gonna let something run or get out early. So obviously, I was cutting my winners short here, and so that can be bad. It can be good. I guess it's just unique to your system, if you will. It seems to be okay for me. So yeah, like I said, that win loss ratio, it's not exact science, but as you can see, I'm up 1% on the account, so 20,200 so far. And I just need to do that 4 more times, and I pass the phase two evaluation stage. Then the only other thing I have going on is this. It's like kind of like a compounding sheet. I don't know. It's just interesting to see. But I basically just say if I'm going to do 1% per trade growth. So that would be, let's say you had a 0.5% stop loss and your target is 1%. That's kind of how that plays out. As you can see, the first day, I put it as like level number because it could be per trade, could be per day, could be per week. It's just kind of how you want to use this, if you will. So the real important thing that I use this thing for is I set an R value and then I have my take profit levels. So it would be 20, 30, or 40 pips. And my stop loss is based upon the R that I put in here. So if I were to change that to 2, let's say it'd be 2R trades, obviously my stop loss would be half of my take profit. So I just kind of use that. And then each column here tells me what my lot size should be if I were to trade, depending upon the level I'm at. So, for example, I'm on level 1 because my balance was $20,200. I made my 1%. Now I'm on level 2. So now I know that if my setup, if I see that I'm going to have a 20 pip stop loss, I may use a one standard lot. If I need 40 pip stop loss just based upon a setup, then I'll use half standard lot or 5 mini lots. So again, it's like a compounding sheet, but I use it mostly for these columns here to kind of quickly help me identify what my lot size should, quote unquote, in general be. So it's pretty valuable. I like using it. So anyway, the only other thing I wanted to mention why I'm doing this video is, let's see, go back to what I like is the blog at My Forex Funds. They have some really good stuff going on here. But what I wanted to show was, where is it? Trading Journal Promotion. I saw this particular blog from September of last year. So I don't know if I'm sure it's still valid, but basically what they say is if for all of your phase 1 and phase 2 traders, evaluation traders, who post their trading journey on an M journal on YouTube will be eligible to get their fee refund after passing phase 2 instead of after the first profit split. So that's one of the other reasons why I'm doing this video, and I'm going to continue to do more of my trading journal posts on YouTube, is because it would be great if I can get that refund faster. That'd be great. Because one of the goals I have is to use, if I do end up lucky enough to start generating income from a live account, then I'm going to be using those profits to purchase other evaluation accounts. So there you go. Hopefully that was valuable to you. Hopefully you're doing well, and good luck trading this week. Take care, everyone.